June 12th, 2023. This is the S&P 500 E-Futures Mini on the NinjaTrader 8 platform, 2000 tick chart. Now, just a quick disclaimer, I am not a professional, just use my content strictly for entertainment purposes only. I don't make any claims to my expertise, and I'm not here to teach anyone anything. This is mainly for myself, to talk to myself, and to learn for my future trading. Now, I want to point out that today was actually it was a choppy but very slow day. So what happened is the M23, which is the June contracts for the E-Futures Mini, they're going to expire, well, in about 4 days. So there is a lot more volume rolling over to the ESU23, which is the September contracts. So you can see the volume has shifted from this guy to this guy. Now, last week there was a lot more volume on the M23 as opposed to the U23. So what's happening is, even though there was like 2,179,000 shares traded, the overall volatility was kind of low because it's the big guys, and other traders rotating their positions from the old contract, the June contract, to the new quarter contract, September. So although there was a lot of volume traded, it doesn't necessarily mean there were a lot of trades to be found. So this is what the chart looked like today. For the most part, in the pre-market, it spiked up, came back down. I drew the highs and lows, which is captured by this. And prices stayed actually within a tighter trading range, which is this yellow trading range I have here, for a good 2.5 hours. Then it slowly ground up, and then it grinded up again, and then just kind of chopped into the close. So there was no real economic data to cause any big spikes today. However, tomorrow there will be a couple of news items for economic data, I think like the inflation report, as well as the FOMC meeting is going to start tomorrow. And Wednesday, that's when a lot of probably volatility will occur, when the Fed decides if they're going to change the interest rate, increase it again, or keep it steady, or very unlikely, they're going to actually cut interest rates. But most likely, everybody's betting that they're not going to do any changes to interest rate. There's a small group of people that think that it actually might increase it by 0.25%, but we don't know. And then also, when Jerome Powell, the Fed chair, comes out and adds color, that's usually when we'll see probably some prices move violently. And the rate release, which is going to come on Wednesday, usually occurs at 11 o'clock Pacific Standard, and then Powell comes out and adds his color at 11:30 Pacific Standard. However, today was no economic news. I didn't see very many setups. I saw one and I missed it, and I actually took another. And then there were two other setups that I saw that I didn't think were that great. So this video hopefully won't be too long. I'm just going to go through it rather quickly. So as I said, there was a lot of volume traded, but that doesn't really translate to a lot of candles, because each of these candles is 2,000 trades, not 2,000 futures contracts, but 2,000 trades. So if you took a look at this, let's just say you pick any one of these candles, this guy, let's say, this is a 2,500 contracts. Over here, this small little candle here, it's another 2,700. So even though there was a lot of volume, it doesn't translate to a lot of volatility or a lot of candles on 2,000 tick chart. So prices, as I said, kind of were jumping around. They look like they're in this trading range. Then the market opened, and even though there's second entries, long and short, all over the place, but that doesn't necessarily translate to a high probability trade, because the second entry longs might turn into third entries, fourth entries. On top of that, the EMA was flattening. Well, not completely flat, but what you're seeing is the price action isn't really respecting the EMA. It's chopping through it, both from the bottom and to the top, and from the top to the bottom. And it did set up a kind of a trading range here. However, the trading range initially wasn't very clear. It was a little bit easier to detect on the bottom, but even when you got to the bottom, it was hard to find out where a good entry would be to take it back up to the top, because the top wasn't necessarily very consistent. So I did see this trading range, but I didn't see any, well, high confidence trades. On top of that, if you look at what the entire range is, it's about 43.60 to about 43.52. So 43.60 to 43.52 is very close to about just 10 points. So, you're asking a lot if you're trying to shoot for like 6 points, because you're asking from move from one end to the other on a very unclear trading range. So unfortunately, I didn't see very many setups that I felt comfortable with or that I could recognize. Granted, this is based on my experience level. I mean, better traders, better chart readers will probably see a lot more opportunities than I did. So then the first thing that I did see, a first potential trade, well, it wasn't a really good setup though, it was this one here. So it breaks out of this yellow trading range. I saw a new high here, like a first entry long, and I saw a second entry long. Now this candle isn't very good for a second entry long, but then this candle, the trigger bar, looked pretty good. And I thought potentially this was going to be a breakout. They'll break out, but it came back and it's potentially going back in because it's one leg down, a second leg down. I was thinking it might be a breakout pullback, but it just didn't set up quite right. And if you did try to enter, you'd be kind of entering at the top of this trading range, even though it's kind of really close to breaching it, or if, depending on how you drew it, it did breach the top of the trading range. There's just too many factors that didn't make it super clear to me. So although I saw kind of the setup, I marked it, just kind of reflected on it. And I was actually pretty happy I didn't take it, even though it would have worked out, because I think this is just, I wouldn't have really known why it would have, I mean, I would have been guessing that it would have worked out. And I don't think I've seen them enough to feel confident in that trade. Let's continue moving up. At first, I had this green channel that touched once, touched twice, touched three times. The top didn't touch very many times, it's just one, and it didn't really touch again. But here it touched the third, well, in this case, the fourth time, and it doesn't really set up quite nicely. So you have a first entry long. Technically, you have a second entry long potentially setting up here, but this is a very terrible signal bar. It double tops and then it flashes down. So if you had your stop one tick below this consolidation, you would have gotten stopped out. But it's just hard to read. So when this green channel didn't look like it was fitting, it was kind of fitting initially. And I thought, well, maybe there's a bigger channel in play. I ended up with this orange one. This orange one fit actually a little bit better in the long term, as I had one touch, two touch, and as a third confirmation. On top of that, I had a pretty good three confirmations at the top. There was one here, and one here. So I actually started playing with that channel. I actually removed this green one, but I put the green one back just so for my own archiving, I'll remember that I first saw this green channel and I was playing off of that. And the green channel did look pretty good originally right here. But then later, when it got prices violated the lower end of the trend channel, then I thought, okay, maybe this orange channel would hold. And the orange channel actually worked out pretty good because you get another confirmation here. It's respecting it. EMA is holding prices. I did see a first entry long, a second entry long, but this is a terrible signal bar. Dropping again. This is where I thought this is a potentially a pretty decent trade right here. This technically is a new low. EMA has been acting as a support, so it's been pretty strong. It's a new low. I see a first entry short, a second clean leg up. Now it's a second entry short. Now the second entry short, I'm reluctant to take a short here because the market bias has kind of turned bullish. So it did have one leg up, which is this blue line here, consolidated, and it made a second leg up. So it is pretty close, almost made a measured move. However, I felt like this leg had a little bit more to go because it's sitting within this orange trading range, not trading range, but trend channel. And so I was looking for a potential failure here. So when this flashed up, I thought, okay, this would probably be a good trade to take because the failure on the second entry short formed above the EMA. The EMA is holding prices and is still within this orange trend channel going up. And there would have been enough room to take an entry here, one tick above the original, and ride it up to potentially the top here. So I didn't enter it though, but I wasn't even sure if I would have gotten filled. It looked like it would have worked. Now it's breaking out through the top. You have an overshoot. I was thinking the overshoot might come back in and come back into this trend channel, but it doesn't. So I draw this second channel going up, and I actually had this other green trend channel at one time, but I wasn't sure because I had two touches down here and I had potentially one touch, two touch, three touch. So I thought it might have been an overshoot of this smaller trend channel, but it kind of kept going up. It didn't really respect this channel. So I kind of abandoned it, but then I drew this smaller, tighter ascending trend channel. It looked like it was fitting really well, and it's pretty far from the EMA. So I definitely don't want to take a short thinking it's going to come back and touch it. And I definitely didn't want to take a long because it's so far from the EMA. I really needed a really strong setup to feel confident. When prices continue going up, it breaks out this trading trend channel. as an overshoot. It looks like it's coming back in. Now it's breaking through. So I'm thinking it's going to break out to the other side about this much as well. However, I don't know if it's going to be a correction to go down or it might actually bounce. So I'm watching the EMA pretty closely. Comes and touches, breaks through. It makes a first entry long, one leg down, comes back. Now it forms, it touched this EMA, makes a second entry long. So actually, after I saw this, and I've been sitting the whole day, you can tell this is at around 12, pretty close to 12:30. It's only 30 minutes left in the trading day. I looked at the, I looked back and I realized, okay, well, there was a consolidation and things are definitely rallying now. I've been sitting the whole day looking for a setup. I missed this one. This one was iffy. Granted, there might be other ones in here, but for my experience level, I didn't catch them. I saw this one and I thought, you know what? This looks good enough to me because this is a strong bar. It rejects the EMA. Well, the EMA is rejecting or supporting prices in this case. It pulled back. Not only did it pull back, it ticked one tick below and it flashed back up. It's just one tick below this guy, right? And so I thought this is one leg down, it's one leg up, and there's enough. I was thinking there's probably enough bulls to push it up to here, at least this higher trading range. If not, at least enough for a scalp. So I got my order ready and I actually dropped it one tick above this green candle. Got entered here. And I was just going for a very conservative 1 point because I was just looking to essentially just get one trade in if I could, one profitable trade off of something that I felt like was a setup or what I interpreted as a setup. So I entered here. It chops around. I also saw this as a new low, first entry short, second entry short. And I'm still thinking it's going long, so I'm wondering if it's going to do a second entry short failure. It comes down, it double bottoms here. It still hasn't stopped me out. I'm just skimping by so far. Pushes up. This confirms a failed second entry short, confirms the EMA is still holding, stops around, and I finally get my 1 point right here. I think I would have taken this trade if I wasn't already in the trade here. And I think I like this setup a little bit more than this one because this one, there's 3 candles down and it held. While this one's a little bit more clear to me, I'm going long, so I'm looking for second entry long, as opposed to trying to go long on a failed second entry short, even though the second entry short formed above the EMA. Plus the signal bar here feels a little more neutral. It's kind of toward the center, while this one was very strong. Now, I mean, I could have gotten stopped out because my stop was right down here, and I was, in a way, lucky that it came down. I trusted the power of the EMA, and it came back and took me, gave me a profit. Prices continue moving up. And for here, I'm definitely not taking any more trades because it's too late in the day. This trade itself was late in the day, and it was just a very, very choppy day today. Well, excuse me, not choppy, but very slow forming day. The prices just kind of go into the close, and it kind of closed at the high. So that's how I saw the charts today. Tomorrow, it might be another slow day tomorrow as people might be getting ready for the FOMC meeting and actual official release on Wednesday. So tomorrow could be a repeat of today, and I had to be very patient and not jump on anything too early, potentially getting a red trade, and that would just kind of get used to getting a losing trade, but they still affect you in some small amount. So just have to be diligent and patient. So hopefully that was helpful.